As of early July 2025, on-chain data reveals a dramatic shift in Bitcoin's liquidity landscape. Only 14.5% of the entire BTC supply sits on exchanges, the lowest level since August 2018, at the current price of around $10,000–$2,000. This contraction in available sell-side supply signals an impending supply shock, where persistent buying pressure meets record low liquidity. In this script, we'll unpack how shrinking exchange reserves, vanishing OTC balances, surging institutional demand, and key technical levels are aligning in ask. Ready for Bitcoin finally break out? 1. Exchange balances plunged to 7-year lows. Glassnode's exchange reserve metric has tumbled to 14.5%, marking a 7-year trough in BTC available for trading on centralized platforms. Historically, such extremes precede major bullish runs, with fewer coins to sell. Any uptick in buy orders can send prices soaring. Liquidity crunch. When fewer coins rest on exchanges, bid-ask spreads tighten, and even modest inflows can trigger outsized price moves. Psychological impact. Traders perceive low exchange supply as a bullish omen, encouraging both hodlers and fresh participants to commit capital. This depletion reflects a structural shift away from short-term trading toward long-term accumulation, setting the stage for a powerful demand-driven rally. 2. Whale accumulation and cold storage exodus. The exchange reserve drop is not merely a numbers game. It mirrors real investor behavior. Large holders, so-called whales, are routinely sweeping up Bitcoin and withdrawing it to cold storage wallets immediately after acquisition. This cohort strategy embodies Nassim Taleb's notion of anti-fragility. By locking away BTC, they reduce exposure to exchange-based sell pressure and position themselves to benefit from future price shocks. Long-term, wallet growth. On-chain analytics show a surge in dormant balances, indicating that coins are moving off exchange for extended holding. Whale ecology. Expectation of higher prices incentivizes large players to hide their inventory, further depleting visible supply and creating feedback loops of scarcity. In effect, the whale accumulation trend amplifies the supply shock, as fewer coins remain liquid for newcomers or traders to purchase. 3. OTC markets follow suit. Miner-linked balances collapse beyond exchanges. Over-the-counter OTC desks critical venues for discrete, large-volume trades are experiencing their own supply crunch. CryptoQuant reports a 21% drop in BTC balances at known OTC addresses linked to miners since January 2025, plunging to 155,472 BTC, an all-time low. OTC liquidity drought, as miners and institutions withdraw from OTC pools. The private market's capacity to fill large bids evaporates. Institutional implications. With both centralized exchanges and OTC channels constrained, even multi-million-dollar purchase orders may need to tap the spot market, driving prices higher through on-chain demand. This coordinated scarcity across all major liquidity venues makes a compelling case for an impending price acceleration once buy-side motivation intensifies. For institutional inflows, spot ETFs fuel demand while supply contracts. Institutional thirst for Bitcoin via spot ETFs has soared. According to Soso Value, U.S. spot Bitcoin ETFs logged 15 straight days of net inflows, totaling $4.7 billion from June 9th to June 30th, including $386 million on the first day and $102 million on the latest Monday. Sustained capital rotation, even as ETF flows paused briefly with a $342.2 million outflow. The longer-term trend remains overwhelmingly bullish. ETF adoption. Each dollar into ETFs represents Bitcoin removed from secondary markets and held in custodial vaults, further tightening supply. Institutional inflows not only validate Bitcoin's role as a strategic asset, but also create automated, predictable demand, a powerful counterweight to discretionary selling. 5. Technical battleground. $109,000. 110K. Resistance zone in the price charts. Bitcoin has repeatedly tested the $109,000, $110,000 resistance zone without a decisive breakout. Traders point to a multi-month downtrend line around $109,000 and a daily bullish flag pattern whose upper edge sits at $110,000. Downtrend line marks the ceiling of every rally since the mid-June top. A break and hold above this line would signal trend reversal. Bull flag breakdown. Gels analysis highlights that closing above $110K on the daily chart would invalidate the flag, opening the door to $130,000 targets in 1 to 2 weeks, coupled with the supply shock drivers. A technical breakout here could ignite a swift rally as short sellers cover in momentum. Traders pile in. 6. Psychological floor. Defending $100,000 since May 28th. Bitcoin has held above the $100,000 psychological floor level, whose breach would risk liquidating $6.42 billion in long positions according to CoinGlass data. This steadfast support has built confidence. Investors see tightened risk of a crash, encouraging fresh entries near $105,000, $108,000. Raise the stakes, with $100,000 acting as a reliable base. Every rally carries greater conviction as downside risk appears controlled as long as that threshold holds. Bulls maintain the upper hand, poised to exploit any lower time frame. Consolidation into a decisive breakout. 7. The convergence. When supply shock meets demand, surge all the elements of a textbook. Breakout are converging. Exchange supply at 14.5%, OTC balances at all-time lows, 155,472 BTC, $4.7 billion in ETF. Inflows over 15 days, technical resistance at $109,000, 110K. When any one of these factors intensifies, say, another $1 billion in ETF inflows one day, or a sustained dip in exchange supply below 14%, the resulting imbalance could be sufficient to shatter the downtrend. As Schumpeter's creative destruction theory suggests, markets often clear out inefficiencies in sudden bursts, not gradual shifts. 8. Timing the breakout. Catalysts on the horizon. Which catalysts could tip the scales? ETF approval or new products. Launch of additional spot Bitcoin vehicles, for example. Valkyrie. Grayscale ETF conversions could inject fresh billions overnight. Major corporate buy if a public company adds BTC to its treasuries. MicroStrategy or Tesla once did it. Creates instantaneous high visibility demand, regulatory clarity, positive rulings on stablecoin. Framework's Genius Act or a US Bitcoin ETF stamp of approval could unleash pent-up capital. Macro shifts. A dovish Fed pivot or renewed dollar weakness could redirect yield-seeking flows into Bitcoin. Any of these events, layered atop the existing supply squeeze, could spark the breakout. Traders should watch event calendars for ETF filings, Fed announcements, announcements, and corporate treasury updates. 9. Risks and contingencies. No. Setup is without hazard. Sudden supply influx. A whale dumping 10,000 BTC on the open market or a large OTC block sale could temporarily relieve scarcity. Regulatory clampdowns, unfriendly crackdowns in major hubs, US, EU. China might scare off new entrants. Macro shocks, a hawkish Fed surprise could drive risk off to leveraging, deflating the breakout. Savvy investors will employ layered entries, scaling and above $109K, while placing protective stops below $100,000 too. Harness upside potential while limiting tail risk. 10. Conclusion. Approaching the tipping point, Bitcoin's exchange supply has never been so scarce. With under 15% of coins on tradable platforms, OTC balances at historic lows, and billions flowing into ETFs, all that stands between BTC and a decisive breakout is the technical barrier at $109,000, $110,000. Once that ceiling cracks, be it through organic momentum or a high-profile catalyst, the resulting supply-demand imbalance could catapult Bitcoin toward new highs, perhaps testing $130,000 or more within weeks. In the words of Keynes, markets can remain irrational longer than you can remain solvent, but when fundamentals, sentiment, and technicals align, rationality often follows in a rush. For traders and hodlers alike, the countdown is on. Watch supply metrics, monitor ETF flows, and eye the $109,000, $110,000 zone. When scarcity meets surging demand, Bitcoin's next leg up will arrive in timing. It could define this cycle's greatest opportunity.